So, J Fernando 787, do you have a group message to chat while trading? Yes, we do. We have a Discord group right here. Down in the video description, there should be a link to join this Discord. Feel free to join it. It's free to join, but through the week, Monday through Friday, this is for members only. So if you want to be a part of the community, join the channel. It's only, $20 a month to be a part of this community and the team, or $50 a month if you want to take the day trading masterclass. Just click the join button on my YouTube channel and it'll give you a description and an intro video of what to expect if you sign up. Don't believe me? Check out all the testimonials from all the members so far. We're serious traders in here. We help each other out and we're focused on helping each other grow. So back to the note here. This is the second note out of 20. So let's move on to the next one. All right. Earnings winners are good buys when breaking new day highs. Dip buy huge winners that are crashing. Look at the past and see where it started to take off. That could be the new support to buy for a bounce. Then simply get out, rinse, and repeat. Earnings winners, keep your eyes. Earnings winner, keep on your watch list and watch very closely as time goes on, and maybe a few days more, and more people will find out about it, resulting in multiple spikes. Earnings winners can get legs, as Tim Sykes says. So sometimes it takes time for news to travel. A company could come out with news or earnings, and a couple days later, it may react to that news. Sometimes it just takes time for news to travel. A company comes out with news on, let's say, a Thursday or a Friday, and then nothing happens, and then you go into the weekend. Everybody has more time on their hands. They're not working their 9-to-5 job. They can read the Wall Street Journal, Bloomberg, what is another one? Business Daily, for an example. They find out this stock just put out good earnings. They say, bet. Come Monday, I'm ready to buy. And then Monday could be a good gap up for the stock. And all this volume's flooding into it and it's tradable. So always keep an eye on stocks that are earnings winners, contract winners for the next couple days, because they can get legs. Don't dip buy penny stocks that have been dropping day after day. Remember, these are penny stocks and they are going to fail. When they are failing day after day, it's probably really bad. And excuse myself if I keep fumbling over my words. Remember, these are my personal notes. So I wrote these 3 years ago for only my eyes only. So it's going to be sloppy and I'm going to have a hard time reading my own handwriting at times. So just have patience with me on that part. Let's move on to the next one. You want to focus on breakouts, good news, earnings, multi-day breakouts. Ride the wave, study the breakouts, see where it is holding before going back up. and look at the history of the stock spiking. What did it do? If you focus on the losers, you will be a loser. Put your energy and studying into the winners. That's where the money is. You will notice patterns studying these winners. New investors, new contract, earnings winners are always on the lookout. That's what you want to watch out for. Spikes occur more on Fridays. Short sellers get out and get scared going into the weekend. They'd rather take the day off and come back Monday. So Friday, like what Tim Sykes says in a lot of his videos, Fridays can be special. We all know Fridays can be one of the hardest days to trade, but special things can happen on Fridays, like what he just mentioned. Options expire on Fridays. Shorts don't want to hold a short position over the weekend. They cover their position. Stocks start popping off, getting out of hand. It could really lead to some explosive moves. That's why he says Fridays can be special. So be alert and on the lookout and observing what's going on Fridays. React to stocks. Don't try and predict them. It's not about home runs. Take the singles and get your profit one trade at a time. Always remember, David, you're not going to win them all, but you can cut your losers when it is not going your way. Make your losses as small as possible. Don't hold and hope. Remember, 90 to 95% of traders lose money. Most don't want to put in the work. Most most don't want to put in the work and study. The more you study and learn, the more edge you have. I say that all the time, guys. There's a lot of lazy people out here. They just want to show up, get hot stock picks, and make money. They don't want to sit and study this game. They're not passionate about it. They make up excuses. They say, I have a full-time job. I have kids. I'm married. I got this going on. I already don't get enough sleep. It's called sacrifice. You have to sacrifice time and effort and put it into this if you want to get anywhere. Nobody made it in life playing it safe. The billionaires say this. You have to take risk in your life to get somewhere. Sacrifice time, quit making excuses, get to work, study your butt off, and obsess over this. Talk is cheap. Actions speak louder than words. Get to work. Plan, risk, reward. What is the potential reward from trade if you are right? What is the potential risk of the trade if you are wrong? How does the risk compare to the reward? Always consider the possibility that you are wrong. Don't be a deer in the headlights. If the trade goes against you, have a plan and stick to your plan. It's very important, guys, to have a plan every single trade. I cannot tell you guys how many people I've seen just jump into stocks and just hold it with no plan. They have no idea when they're going to sell it for a profit. They have no idea when they're going to sell it for a loss. They're just in it and they're looking all around on Twitter, stock twits, asking people, when do you think I should sell? What do you think the stock will do? Always have a plan every single trade. And the hard thing to do as traders is to admit when we're wrong. Nobody likes to admit when they're wrong. Nobody. So in the market, you have to admit when you're wrong, man up to it, and move on. Because if you don't, it will eat you alive. All right, let's move on. Aiden Flores says, "Hello there, good sir. I am new to the club. Hope to see the outcome of this journey. Welcome aboard, man. Welcome aboard. I've been doing this for over 5 years now. We're just getting started." Risk, reward, buy and sell. You don't know the exact risk reward ahead of time. All you can do is estimate. Use prior support and resistance levels as to what a stock can do. That way, if you're long a stock and it breaks below support, that is your risk level. If you're short a stock and it breaks above resistance, that is your risk level. If a stock does exactly what you think it'll do, how much will you make? That's your potential reward level. How to calculate risk reward. Take the profit distance from buy in to your target sell point, divide the two. Your stop loss from buy in your limit to sell if losing. I don't know what I was writing there. Past performance history of running. Has the stock spiked big or been volatile in the past? If it has spiked, was it able to hold its spike for very long, or did it fall quickly? What does the long-term stock chart look like? If the short long-term chart is uptrending, how volatile has the stock been? Or has it been a boring, gradual uptrend, so any big move now seems excessive? If the stock has spiked big and gone supernova in the past, momentum traders and short sellers remember these kind of plays. Looking back at the history of the stock is very important to see what it did. More than likely, history will repeat itself in stocks. It's like what he says and what I say all the time. I consider myself a glorified history buff. I'm always looking back at the history of the stock and looking for any clues that the stock could give me of the type of personality the stock has. How much does it like to move? How big are the moves? Does it hold its gains? And also, traders remember big movers. They just do. Traders remember stocks that go supernova, parabolic. And then when they spike again, they say, "Oh yeah, I remember that stock. A year ago, it ran up to $100. Bet I'm putting this on my watch list and I'm keeping an eye on it." You guys hear me say it all the time in chat. Traders remember stocks that spiked in the past. Public float, shares to trade. Shares outstanding and public float matter as if there is enough demand for the stock. You must consider how much supply there is. If there is not enough supply and constant demand, the stock price must rise in order to attract more sellers to accumulate the demand buyers. These are the economics of stock trading. Learn about supply and demand. Shares outstanding are how many total shares of a company there are, while public float are the number of shares that can actually trade. The difference is that some shares are restricted, locked up by insiders. So the shares outstanding are the total number of shares, period. The float is the total number of shares that the public can trade. I greatly prefer buying low float stocks since it doesn't take much demand to really spike the stock. Price given the limited supply of shares anywhere from 1 to 5 million is low float. My favorite saying, the lower the float, the bigger the rip. If you come across stocks, the float is under 1 million, I like to call it nano float. You're really going to see some wild, crazy moves if a stock's float is under 1 million. But even a stock with 10 million shares in the float may be considered low float if the demand, the volume, is enough. For an example, if the stock trades 20 to 50 million shares in a day, that 2 to 5 times the total number of tradable shares, you have to figure some people hold onto their shares and will not sell, so the supply is lacking compared to the buying volume. Shares outstanding multiplied by the stock price is the total value of the company. $5 per share times 10 million shares outstanding equals 50 million company value. Watch a company market cap closely in addition to trading volume versus the public float. Even though a stock price is based on supply and demand, sellers will come out in force if a company's valuation gets the pricey. Even though a stock price is based on supply and demand, sellers will curse if a company's valuation gets too pricey too quickly. And since I only watch big percentage gainers every day, this happens often. Again, sometimes I can't even read my own handwriting. We're actually blowing through this pretty quickly, guys. And again, this is all from the Traitor Checklist DVD from Timothy Sykes. These are notes that I've took 3.5, 4 years ago on that DVD. It's like a $400 DVD. So I thought I'd share these notes with you guys. Truly reasonable, logical valuations do not always happen in real time. It's very scary to short a low float stock since short squeezes can happen. Low float stocks usually also have a low market cap. Under 50 to 100 million, that sounds big in the real world, but that's very small on Wall Street. A 10 to 20 million company can easily be valued at 20 to 40 million. With the right news, short squeeze demand from buyers, far more difficult for a 200 million company to become a 400 million company based off a short-term news. It's something to think about there, guys. Sometimes stocks can break out of old habits. Performance with the right news, setup, but it's tough. You will learn over time that stocks have certain personalities. Usually, stocks that have spiked in the past, only to fail quickly, will fail quickly again. Stocks that have gone full supernova in the past are more likely to go supernova again. It's their personality. Boring stocks in the past usually remain boring in the future, and I hate boring stocks. I want to trade the biggest spikers, so even if I screw up on my entry and my exit, which I expect I will going in, there's still plenty of room for profits in the meat of the move. The best time to trade are the first and last hour of the day. Nearly all my trades are based on potential morning spikes and panics. Don't force trades and overtrade. Be patient, your play will come. Be a sniper. Don't give yourself deadlines for goals to achieve. Take it one trade at a time. You do not want to force plays. Patience is key in this game. Pre-market volume is usually pretty light, is a sign of what the open will look like. These are some pretty good notes, guys. John King asks, do I only long penny stocks? I never short stocks. I never do. So I just never really seen the point in shorting stocks. It's a big hassle. You gotta pay fees. You gotta pay locate fees. They can take back your borrows at any time. The popularity and brokers having the shares to short change from year to year. You need to have multiple brokers open because one year it may be popular at E-Trade, but then the next year E-Trade will never have borrows. But TD Ameritrade's popular now, so now you got to switch over to TD Ameritrade. And then they're popular for a while, and then Centerpoint Securities becomes popular, and TD Ameritrade never has shorts anymore. So now you got to migrate over there. And it's just the thought too of your losses could just be unlimited. And it's just a very competitive field. You have to wake up really early to reserve shares, which cost money. Even if you don't use them, you still got to pay a fee because you reserved them. So it's too much of a headache. I get much more of a thrill, and I love searching for those next epic supernova squeezes. That's where I like that's where I get the thrill and enjoyment from. On the hunt for that next squeeze. Because when shorts get squeezed, it's a beautiful thing. It really is. Look at GameStop. All right, reason catalyst. What is the cause of the stock's trading setup that you are considering? How, meaning, is the catalyst, and will it be short term or long term? What will happen to this stock after the catalyst has come and gone? How will others find out about this news? Can it go viral on social media? What will other people's reaction when they are seeing this news too? I love buying earnings and contract winners, shorting pump and dumps, and technical breakdowns on overextended stocks. Earnings and contract mergers can be very meaningful for days, weeks, even months after the news is announced. Just a question of how much the stock could rise. Pump and dumps have limited lifespans. When the marketing, the promotion, money dries up, insiders already dumped their shares, these junk stocks can crash quickly. And that's what I like about Timothy Sykes. And if you go through and watch all of his videos, he's really, really good at finding these scammy piece of crap companies and finding these promoters and just waiting for the promotion to end and for the stock to crash. And he capitalizes on it. I mean, he's really good at that. He really shows you how to get on Twitter, find these guys, track them, watch them, investigate them, and even with these email promotions, noticing them, signing up for them, being observant. Email promotions still go on to this day. And back in the day, they called them boiler rooms. They used to rent out these lobbies and fill them with all kinds of phones and just call people all day. Like the Wolf of Wall Street. If you've guys seen the Wolf of Wall Street movie, exactly like that. That was a boiler room back in the day. And then it evolved into email promotions. And then it evolved into, what are those, discussion boards like Reddit, Discord. What's another one? There's a couple other ones out there. Twitter, StockTwits, the evolution of it just keeps going and going and going. But the bottom line, human nature never changes. I don't get really too involved with options. I mean, I've tried learning options many, many times. It's just, and with small cap penny stocks, they don't offer you to trade options. They only really start trading options on stocks if it's above what, $20? So, or if it's really, really popular like Ford or GM, you're not going to find options on these small cap penny stocks because nobody trades them. They'll go days, weeks, months with average volume at about 5,000 maybe a day, if that. And then they'll put out a news release and it'll have that one good day where it does 100 million in volume. And then the next day, something new will pop up. So we went over this one. Let's move on to the next one. You could tell how old these notes are too. They're all yellow and white. Technical breakdowns on overextended stocks don't even need news. Catalyst. The price action can become reason enough for shorts to pounce. I also like buying upcoming media appearances, new product and introductions, anticipation, and high expectations help stocks spike. Ideally, the news catalyst is already out before I buy, short sell, as I never want to guess on upcoming news that can go either way. I never want to play earnings guess games. All have too low odds of success. And I see it all the time too. A company puts earnings out the next day or in a couple days, and these people buy in on these stocks before they put earnings out. That's just straight up gambling. Why would you? I'm not here to gamble my money away like that. Why not wait till the company puts out the earnings? And if it's an earnings winner and volume attacks it, start putting together a plan. Just don't buy into a upcoming earnings winner and hope that they put good earnings out and it gaps up. If you want to gamble your money, go to the casino. You know, they even have casinos online now. They're starting to. But this is a business. Treat it like a business. My key to success has been piggybacking moves up and down that have already started momentum wave. I never want to be first to spot news or a catalyst, as I don't know how others will react. I prefer reacting to reactions and using them as my guide. I'm the exact same way. And it's just like the hedge funds and the people from Reddit when they were in a war. I heard all these people hold the line, hold GameStop, hold your position. Why on earth would I want to join in on the fight and blow my portfolio up? Let those guys blow their portfolios up. You think they'll care? They care if you blow your portfolio up? No. So let them guys fight it while we sit on the sidelines. And whoever starts to win, we'll piggyback on that. We're here to make money. We're not here to lose it all. There are literally hundreds of variations of news and reasons to make you want to buy or short a stock. The vast majority of them are not reliable enough. I see too many students get too excited about minor news and then they don't understand why the stock is not moving that much. Sometimes the news is meaningful and the stock still does not have the way anyone expects, and people hold and hope that the stock will come back. Hope is not a strategy. News catalyst helps create potential setups, but once it's out, the market decides based on price action how meaningful the news is. I often ditch a stock with a solid reason catalyst if the stock price isn't reacting to the way I thought it would. That's some good notes right there, guys. A lot of mental, think about it notes. And remember, the stock market is always right. Don't be a emotional trader. If things don't go your way and you missed your chance and want to trade to get your money back, just walk away and try again the next day. You're not perfect and you can't win them all. Take your losses as a learning experience and try again the next time a play comes along. There's a very common occurrence in the stock market called buy the rumor, sell on the news. Stocks move up and down based on expectations, not just breaking news. Oftentimes, news is expected in advance, so I have seen great earnings reports and FDA approvals lead to big sell offs. This is why Reason Catalyst is only valued from 1 to 10, not 1 to 20. Always allow yourself not to place as much importance on news as you might think, and instead prioritize the reaction to the news and see if that reaction has legs. There's a lot of people out there will say the stock's an earnings winner. I don't understand why it's selling off. Why is the stock selling off if they put out blowout good earnings? Well, look back. What has the stock done before it put out the earnings? Well, it gradually just rose for 5 to 10 days, just nonstop. It's called buy the rumor, sell the news. People jumped all on it, anticipating the news, and then when they drop the news, boom, everybody sells it. Doesn't matter what the news is. Market environment. 3 out of 4 stocks follow the market. Penny stocks differ somewhat. But if the overall market is in the midst of a big upswing or downtrend, all stocks feel it. Conversely, when the overall market is down just for a day or two, often I see penny stock pump and dumps being the best performers. I see this also. So much for safety first. I will be more aggressive on my buys in bull markets and more aggressive on shorts in bear markets. Don't try to guess. Expect future markets. Just react to the current market. I want to make a quick note right here, guys. You're going to see all kinds of people and all kinds of videos say stock market crash 2021. It's coming. Hey guys, I think the stock market's going to crash we're getting very, very close. Nobody knows what will happen. Nobody. I don't care who you are. Nobody knows what will happen tomorrow. Take it day by day, live in the now, and stay there. Don't try living in the future. Okay? If you're worried about your retirement, but you're not retiring for another 30, 20 years, why are you tripping? You're in it for the long haul. Too many people worry about the future, have zero expectations, and you'll never be disappointed. Take it one trade at a time. In the current market environment, whatever it might be, there are so many potential buys in the current hot market. Even absolute junk is running. So I go with the trend and buy more often. And so it just goes to show I took these notes 3 years ago and we are still in a hot bull market. Junk is going up. Everything is going up. Will it last forever? No. But for the time being, ride the trend, ride it out, and be very observant of the day it all stops working. You have to adapt and react. The ones that react to it and adapt when the markets change, those are the ones who are going to survive. And I also like how he said, when the market sells off, a lot of times we see penny stocks just catch fire and go crazy to the upside. I've seen that multiple times happen. There'll be pure panic and sell off in the overall market. The SPY is just selling off hardcore. Then you got a stock like KOKD going from $4 to $30 in one day. It's just some wild stuff. I like to call penny stocks the Wild West. And for me, I consider penny stocks under $1. I like to say small cap stocks from, $1 to $20 are small cap stocks. That's what I like to trade. And if you guys are just joining up, we're going over my study notes from 3 years ago on Traitor Checklist from Timothy Sykes. And if you guys are new to the channel, what are you guys waiting for? Hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders. And down in the video description, join my Discord group. Join the team. Let's get this money, guys. We're all here to help each other, learn from each other, and motivate each other to be the best that we can be. Why not be a part of a great team? That's what I want to build here at Trading Learning 101. All right, let's see what some of you guys are saying here in the chat. Talking about some options. News comes out after hours and prior out, like after hours and pre-market. You can buy and sell pre-market. It just depends on what broker you're with. If you're with Robinhood, you can't trade until 9. And all of us traders know at 9 o'clock to be watching, because most people on Robinhood, and no offense, they don't know what they're doing. They just want to buy in. So you'll see a big volume explosion at 9 o'clock. All right. You guys are talking a lot about options. I'm not into options too much. All right. So I don't know about you guys. I've been doing this for just over 5 years. I've never witnessed a bear market. So I don't know what to expect when a bear market comes. I've only traded a bull market. So just keep that in mind going forward. If you guys want to do this full time, you have not even experienced a bear market yet. So until we see it and go through it, we don't know what will happen. So this is what Tim Sykes says about a bear market. In bear markets, fewer plays really spike. So I will not just short more, I can be more aggressive shorting bigger size. 2, since it's not as scary as it is now. People usually prefer one or the other, but try both buying and shorting. Think of them like a forehand and a backhand in tennis. Then focus more on the one you prefer. Adapt to whatever play works best. Consider yourself a scientist and test, refine, in the pursuit of success. Analyze various strategies and patterns that are working well or not. Never get too comfortable with any one market, trend, or pattern. Successful traders adapt in the pursuit of success. watch list, percentage gainers of the day, and then putting them to the SSS test. Look at spikers that have follow-up legs. Stocks that spike in the morning and hold their gains the rest of the day, or even kept gradually rising as the day goes, is a safe hold overnight. Look at the history though. Did it ever crack overnight, or does it have a history of gapping up? Remember, no bad sushi. If you follow Tim Sykes, he loves sushi. So you'll see him refer to a lot of what he loves in his life and to what he talks about in his content. Stay away from bad sushi. He only wants good sushi. So be very observant of a stock, multiple time frames. Be very, very, very observant. Consider yourself a detective. You're looking around, being very observant to help put the story together. That's what I like to say. We got 2 pages left. Pre-flight checklist. Identify a stock that is a big percentage gainer above 10%, ideally a former runner, predictable in terms of its trading history, Yahoo Finance, Finviz.com, The Lion. Always see what the stocks float, shares outstanding, and shares short, creating a watch list every day. Finviz.com, Screener tab, Technical tab, Performance tab. Today, up 10% or more. Look at the biggest volume plays, looking at small cap stocks that are the biggest movers. Pick your watch list based on percentage gains and volume and the lock of the chart preview. Then go to your Yahoo Finance, market data, market movers, and see if you can spot anything new on there. Double check the ones on your watch list. What is the catalyst? Why is it up? Avoid low float junk. And here's the last page. Where is the long-term, short-term support and resistance? Always look at the history, focused on clean charts. Avoid long-term bagholder charts. Always check Twitter to see what people are talking about. Watch list setup. Finviz, look at the percentage gainers and volume. Double check and see if anything new pops up on Yahoo Finance. Analyze on Thinkorswim, look at history, support and resistance levels, long and short term. SSS checklist. Twitter to see what the buzz is. Always double check and look into what you're investing in. Look at the news and see how the market reacted to the news. You can never do too much research on a company you're putting your money into. And now a cool tool that you can use, like Twitter for an example, if you guys want to see what other people are saying about a specific stock, or if there's any news on a stock, all you got to do is go to the search bar right here, type in the money sign followed by the ticker. So for this example, We'll use, let's do BNGO. Hit enter, and it'll show you right here all the top tweets from that ticker. You can filter it by the latest to see who posted recently about this specific stock, see what other people are saying, and so on. People, photos, videos, but I will say, don't get caught up in doing this, because I like the term, you're looking for a reason to buy. So if you're interested in swinging a stock and you want to see what other people are saying about that stock, you're looking for a reason to buy that stock. That's what I like to say. So those were all my notes from the Traitor Checklist. Notes that I took from 3.5 years ago. So some pretty good notes. I hope you guys enjoyed those notes. If you're new to the channel, what are you guys waiting for? Hit that subscribe button. Join up. Come on. Join the wolf pack. Let's see what some of you guys are saying here in chat. Najee says, great notes. I'm taking notes. Thanks for sharing your knowledge with us. No problem. David says, hi, Wolf. Can you post your R link of Twitter here? So you want my Twitter handle? Is that what you're asking for? My Twitter handle is going to be at Davidnuttjr. Let's see, I'll pull up YouTube here and I'll post it in the chat. I also have my Twitter handle down in the video description. DJ says, no matter your style, this is great stuff. Appreciate it. It's the Traitor Checklist by Timothy Sykes. You should always have a pre-flight checklist before every single trade. You should have a plan. You should have a profit, your risk tolerance, all in place. And then practicing these steps, going over it and doing it every single day, you guys are going to get better. You're going to get faster. And you're just going to get better and faster. I've been there. You're going to be really, really slow pre-market putting together a watch list, but you will get faster. And then just a heads up for you guys in the Discord, what I plan doing going forward, and I'm trying this out. So over the weekend, I have a new channel right here, the week ahead. So any upcoming earnings, new IPOs for the upcoming week, I'm going to be posting it in here in the week ahead to help prepare for the upcoming week. Feel free to post in here. And then every morning pre-market, I'm either going to scan or stream my trade ideas pre-market gap scanners in here, or I'm just going to take a screenshot half hour before the market opens just so you guys can see everything that's gapping up and everything that's gapping down. David says, I've watched a lot of your videos in the past and learned so much from it. Appreciate it. I just crossed over 425 videos posted on YouTube. So much great free content, guys. Take advantage of it. John King asked, do you use any indicators? The only indicators that I use is VWAP and a couple moving averages. That's it. David says, post level 2. I don't even use level 2 in my trading. It's all nonsense. Level 2 was popular in the 90s. Penny stocks are super, super hot right now. This video will be available at the end, yup. I'll go through and I'm going to edit the beginning of it to cut out all the static. But yeah, this video will be on demand for free and posted. All I ask is you guys just like the video, hit that subscribe button, and join the channel. Help me out in that YouTube algorithm. I help you guys, help me out. I want to try to reach as many people as I can and outgrow some of these other channels that they, as many subscribers as they have, they don't give you guys what they don't give you nothing. I'll just say that. No, I did not get to see the Bumble IPO last week. Did it go crazy? What would be even the ticker symbol for that, for the Bumble IPO? A website that a lot of people overlook is Finviz. This website, you could do so much for absolutely free. It's insane. BMBL. Looks like it had some crazy action. Good morning spike from 71 up to 85, consolidated the rest of the day, and then at the end of the day, everybody started dumping it. Another website that I like for looking at charts is Big Charts. Let's look up Bumble. Two days. Look at the different charts that they have here. I'm gonna change it to a candlestick. All the different types of charts that they could have here for you. That's a pretty cool one. Here's a black one. That's actually pretty slick. So it opened up a lot of indecision right there. Chose to go down. And then it popped back up to where it failed from. And then a nice downtrend. And look at that bottom right there. Right at 70 bucks. There was a big buyer right there. Just propping and holding that stock up right at 70 bucks. Popped up. Came back down. Tested it. I consider that a conductor saying, all aboard. Everybody jump on. This is your last chance. And off it went. Up to 77. Pulled back down. Old resistance there. 71. Off to the races all the way up to 85. That would have been a nice swing. Wow. The nice consolidation here from 77 up just over 80 bucks. It's failing over 80. So I'd look for it next week to bounce off 75 back up to 80 bucks. 79, 80 bucks. Something happened at Schwab, but your brother was able to get in. What was another stock that popped off on Friday? I think SOS. They ain't even drawing a chart for it. Yeah, there we go. SOS, I've seen a lot of people talking about this one. From 4 all the way up to almost 8 bucks. Needs to hold that $7 for a continuation. It could run up to 10 bucks. SOS float is 41 million. It's at all-time new highs, it looks like. It's on the New York Stock Exchange. No insider or institutional ownership. Insider ownership's low. Average true range is $1. Beta is 72. So it's not correlated with the market. Very nice. I like that. John King asked, do I trade pre-market? No, I don't trade pre-market. Sometimes I will if it's a really, 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 really good setup, but it's really, really small size because I don't want to ruin my trading day before it even begins. So I usually like to wait. Let the market open up. Let 15, 20 minutes go by. Let the market prove to me that there's strength. Let the stock prove to me that it's strong. Because if a stock's tradable, I tell myself, it'll kick you in your shins. It'll blow air horns, yelling, hey, trade me. I'm tradable. You just want to keep it really, really simple and basic and keep your cool. That's why every day in chat, Monday, Tuesday, Wednesday, Thursday, Friday, before that market even opens, I put a message to everybody. Hey guys, all right, let's keep it chill. Let's let these stocks play out. We're not chasing after anything. Let's let these stocks come to us and let them set up. Because you remember the term that the guy from Bulls on Wall Street likes to say, Canal. If you chase, you die. And every single day we're calling out great plays in chat. I wasn't in chat Friday. I took Friday off. But going into Tuesday, we'll be ready. All right, these were the popular stocks on Friday. I've seen a lot of people talking about SNDL. I think that people on Reddit were pumping SNDL up. Look at that big sell off. It was a good swing trade. Looks like that float is massive. That's a $500 million float. So you're going to need a lot of volume to get that up and going. I think they even mentioned SNDL on what was it? CNN, CNBC. Yeah, I don't know what was up with that. But a lot of selling pressure right here. It may get one more pop up to 250, maybe 275, but below two bucks, I'd cut it. Got to think the stock moved from 75 cents all the way all the way up to $4. That's a big return. TLRY was another one. Let's see what TLRY did. From 15 up to 65. That's a nice breakout right there. Nice wedge breakout. Right at 40 bucks. You got to look back on these charts at times and put it together and think about other people that are in on this stock. So you got people that probably all accumulated right here, all accumulated right there. Stock kept gapping up and pushing. Then it got this consolidation, formed a wedge right here. That's a nasty looking wedge. Right here. Formed a wedge, pushed up out of the wedge, pulled back, held the area it broke out from. And the next day got a big gap up, and everybody that swung it right there, right here, they're all taking profits now. Got a nice grind right back up to its high. Right there. It pushed up to that high and sold off on that extreme volume. It tested the high on that volume, didn't break out higher on increased volume. Now everybody's dumping it. And it sells down like that. Now you got bag holders. Oh my, let's look at GameStop. Few opportunities here on GameStop. Like how it leveled out right here. And just look at those rounding bottoms. Just a nice rounding bottom right there. Here's another rounding bottom. It's trying. Needs to get up and over 62. Could actually draw a trend line like that too. It's just too much attention on GameStop. I think it will get that bounce. It's just a matter of when. $100 is going to be that resistance. About right here. That's where it could bounce up to. I don't pay attention to the level 2. I watch the tape. The tape is very, very important to me because you can't lie on the tape. Consider the tape like the receipt of all the transactions. So you hear everybody always say on the level 2, they can always flash big size and then take it away. You'll see someone flash a big order on the ask or the bid, trying to scare away people and then take it off as soon as prices get close to it. There's too many games on the level 2. So look past all those silly little games they want to play. Pay attention to the tape, because the tape don't lie. You're seeing all of the transactions that are getting currently printed real time. Pay attention to that. See if there's that demand there, if there's dilution there. Are there buyers still coming in, pushing into it? Is there a big seller just unloading? If you pay attention to that tape over time, get time under your belt, you're going to start seeing patterns on that tape. You'll really start to see a story unfold. You're like, wow, this company's diluting. They're diluting hardcore. So I hope that answered your question on level 2. I looked everywhere on tips and tricks for reading the level 2. And I just gave up on it and I took it off. And I'm not kidding. The day I took level 2 off my radar and I never used it again, my trading improved because all it was a distraction. And that's the honest truth. Some people, level 2 works for them. I know Mad As Trader may use it all the time. But for me, I didn't care for it. The tape is where it's at. And by the tape, do you mean time and sales? Yeah, there's multiple nicknames for it. The ticker tape, the tape, time and sales. They called it the tape back in the day because it was a little ticker and it spit out the tape with all of it had a jar over it. And then when they would have parades down in New York, they'd cut up the ticker tape, and that's what they would use as the confetti. Just cool fun facts about the stock market. I'm actually interested in all of this stuff and the history of the stock market, and this is just a passion. I mean, if you don't have a passion for this and you don't know and you don't want to know all the inside and everything, the history about the stock market, if you have no interest in all of that, you don't have a passion for all this stuff. And I honestly mean that. You have to have a passion for this stuff if you want to be good at it. You have to know how the inner workings work and the lingo and all that stuff. So that's the ticker tape right here. It was a very, very expensive tool. And you were considered wealthy if you had one of those in your house. So if you've ever watched one of those movies with the old man and the glass of scotch, and they're sitting next to a fireplace, and they have that little piece of paper, string of paper in their hand, that's what that is. It's the ticker tape. Then it evolved into this as technology advanced. And that's how it would spit out right there. So pretty cool stuff. John R says, I use the level 2 and feel what you are saying. I used to see the bid, ask, and volume. I've screwed myself multiple times using the level 2. There's just, like I said, multiple games played on the level 2. I think I have a picture of the level 2. Hold on. So here's a picture of the level 2. What I would see a lot of times on the ask right here, you would see like a big size, like let's say 20,000 shares, 200,000 shares stacked on the ask. And when a stock would come up to resistance, you would see those 20,000 shares get eaten up. It'd go down to 17, 17, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, and it busts through resistance. And you'd be like, yeah, it ate that ask up. But then it'd fail and it'd quickly drop. And you'd be like, what? What's going on? It just ate through 40,000 shares on the ask and it just fell hard. There are little tips and tricks on the level 2 you can look out for before big moves. But it happens so rarely. Like I remember one was it'd get real heavy on the ask and you just see big size and it'd get really really thin on the bid. But what would happen was the stock would go higher because they tricked people into thinking big sellers were on the ask and it was just an endless pit on the bid. Or if you've seen huge size on the bid and the ask was very thin, prices would go lower, not higher. It's just a lot of trickery in games. I literally stopped paying attention to the level 2 like a year and a half, 2 years ago. So honestly, my trading got better after I took it off, to be honest. All you really need to pay attention to is the chart, price action, volume, and the tape. That's about it. Keep it simple. The more indicators that you throw on, you're just layering the difficulty and you're getting distracted from the big picture. The KISS method, keep it stupid simple. But if you guys want to see more of my notes that I took when I first started up and you enjoyed this video, leave in the comments. Do you want to see the rest of the notes that I've taken from the past? I have a huge binder filled with all of the notes that I took when I first started. If you guys are new to the channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. And while you're there, click the join button right here. You got two options. You could join the Discord chat room or you could sign up for the day trading masterclass. Also, I have a link to the Discord group right here. Over 40 different educational channels in this Discord on topics, tape reading, level 2. Everything that I've known, learnt, what I've discovered, all shared in this channel on tape reading and level 2. Trading indicators, trading psychology, options, Fibonacci, all things Fibonacci, ETFs, chart patterns, candlestick patterns. If you guys want to see what other people are saying, go to the testimonials, see what all the members are saying. We're focused on building traders up here to have the confidence to trade for yourself. We're not here to give out hot stock picks and to feed you with the hot stock of the day. We're here to work as a team, motivate each other, push each other, and learn from each other every single day. So if that's something you're interested in and want to be a part of, join the Wolf Pack. We'll welcome you in with open arms. We're always looking to grow as a community. We're in here every single day, Monday, Tuesday, Wednesday, Thursday, Friday, working as a team, calling out stocks that pop up, having each other's backs, developing game plans, trading plans, working together. We be killing it out here, working together as a team. And I'm not just saying that. I currently don't have my Street Smart Edge open right now. I'm not going to load it up because I just want to do this video on the Traitor Checklist. But we've been streaming now for an hour and a half. I want to thank you guys all for tuning in and watching. Hopefully, I was able to answer all of your guys' questions. And again, join the wolf pack, join the community, guys. If you're dedicated and serious about this, join up. We're here every day pushing and motivating each other to be better as not only traders, but as human beings as well. The whole purpose of life is to grow. All right, guys. Remember, stock market is closed tomorrow for President's Day, February 15th. We'll be back to work and at it February 16th, Tuesday. I'll see you guys all in chat. And like I always say, guys, have that patience, have that discipline, and study, study,